Hi, Chris Bertay from Signet Financial Management. It's no secret that the market's been pretty volatile lately. If nothing else, you've probably seen the headlines on the news, the Dow down 600 points in a day, or the worst week in the S&P 500 since the Great Recession in 2008. It can be pretty scary. I'm in the business, and honestly, it scares me sometimes. If you look at 2018, the S&P 500 was down 6.6% from the year, but from its high in October to its low in December, it was actually down 20%. So what can you do? And more importantly, what should your advisor be doing for you during these volatile times in the market? Well, in this video, I'm going to cover the 3 things that your advisor should be doing for you during market volatility. So the first thing is discussing protection options with you. Now, I know this may seem like common sense, but for whatever reason, a lot of advisors don't do this. Now, whether that's because they don't have the resources to, it's too much work because they have too many clients, or maybe they just don't understand how, a lot of advisors just don't do this. So there are a couple ways you can protect your portfolio. Now, the first one, in its most basic form, is hedging. Now, very simply, a hedge is placing a position in your portfolio that will make money as the market decreases, even though other positions are losing value. So the goal here is to have a net neutral type scenario where that hedge is making money even though some other positions are losing value. And a hedge can be accomplished by a bunch of various means: shorting stock, using a derivative like an option, or even an inverse ETF position. There are a lot of choices there. The second thing could be rebalancing your portfolio. So if you're in a diversified portfolio and say you have 60% stocks, 40% fixed income, you know that 40% fixed income is likely going to generate a consistent yield for you, but the stock portion is what's at risk. So instead of having 60% stocks, 40% bonds, maybe you reallocate and go 50% stocks, 50% bonds, or 40-60, or whatever the case may be. Now, the third option, and this isn't something I recommend, is just going to cash. I don't recommend it for a couple reasons. First, if you're in a taxable account, there could be some tax implications. But even if you're in a tax-deferred account like an IRA, market timing has proved to be a failed strategy because many times you missed the upturn in the market that would appreciate your portfolio in value because you were in that cash position. So really, I think the first 2 are the more viable options, and then cash being a distant third. Okay, so number 2 is your advisor should be looking to take advantage of the downturn. I know that may seem like an oxymoron, but really the reality is that a pullback in the market can provide some opportunities, such as tax loss harvesting. So if you're in a taxable account, you could have taxable losses that you can sell, i.e. harvest, in order to take advantage of offsetting any gains that you had to reduce your tax liability. And those losses can be applied not only to your investment portfolios, but other areas of your taxable life, such as real estate. Now, the last thing your advisor should be doing for you, and this is probably the most important, is simply communicating with you. For some reason, advisors just don't do this during the scary times in the market. And ironically, this is the most important. This is the time that you need your advisor most. They just stick their head in the sand and hope you don't notice or hope you don't call, simply because they don't want to deal with it. They believe that the markets will come back over time, and even though historically that is accurate and true, it doesn't alleviate your fears. This is your hard-earned money and your hard-earned wealth. You deserve to know what's going on and what your advisor is doing about it. Now, if your advisor is doing these 3 things, and I really hope they are, then great. You know you found someone who you can likely trust and who has your best interest at heart. Now, if they're not, it may be time to evaluate who you're entrusting your hard-earned wealth to. You've worked your entire life to build this, with the expectation that it's going to take care of you and your family during retirement and maybe even leave something to future generations. You deserve to have someone who cares about your money as much as you do. If you're interested, I'm happy to give you a free consultation, evaluate your situation, and give you some suggestions. Feel free to reach out to me. I'll put my contact information below this video. But thanks for listening. I wish you and your family a healthy and prosperous 2019, and I hope to see you in the next video. Take care.